Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day, and happy Veterans Day to all the veterans out there. Market-wise, let's take a look at it out here. We had the Dow Industrials down 14. NASDAQ is up 2. S&P's are flat. Gold contract of $6.80, trading at $1,166 an ounce. Silver up 11 cents at $15.78 an ounce. Platinum up 9 at $1,207 an ounce. Copper up a penny and a half at $3.03 a pound. Light sweet crude up 40 cents at $77.80 a barrel. Bond market is closed out here today. King dollar down 326 ticks at 87.58. You get the euro up 57 at 124, and the yen's trading up 48 at 115.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? S&P has hit 2041. Another high. We're at 2037 right now. If we go over to take a look at the SPY, the SPY thus far has done 38 million shares. Yesterday, you did all of 66 million. This is going to be more than likely one of the lightest days of the year. Yes, it is a veterans holiday. No doubt banks are closed. Bottom line is you still have a higher high with lighter volume. Dow Industrials. We go take a look at the Dow Industrials. What you have with the Dow is this. Got to another high today, 17,638. You're at 602 right now. NASDAQ Composite. We take a look at the composite. Let's see. Did she get to a high? So we're at 4657. Yeah, she did. 4654 was the high that was established on the 3rd. So composite also got to another high, is at a high right now. Volume on the composite is going to come in at about 1.5 billion shares out here. The 3 Qs, the NDX 100, what you have at the NDX 100, also at another high, 12 million shares. You hit 102.16. That high is 102.3. Right now at 102.11. Gold contract. Now, we get some dynamics happening out here, folks, and we're going to start. If we take a look at gold, this is what you have with gold. Gold contract out here today has done 171,000 contracts. If we look at gold going back to last Friday, what you're going to see is this. You're going to see gold came off the bottom with conviction. On Friday, we went from 1130 up to 1179, had the juice behind the move, 298,000 contracts. Yesterday, you backed down with 177,000 contracts. You got to a price point of 1146. Today, 1145, rejected lower price, had lighter volume, moving topside. In that correlation, and this is the correlation, folks, and it's about as direct as you can get. We go over to that dollar index, and bottom line is that the S&P's like higher dollar, which is a total reversal from, 4 or 5 years ago, even 3 or 4 years ago. Bottom line, the market now loves a strong dollar. Tick for tick, which has been pretty amazing out here the last few days. Dollar pulls back, market pulls back. Dollar pulls back, gold goes higher. It's going to be really intriguing watching this whole thing play out. The reason being is that the dollar index itself, what it did out here today is this. So let's picture this. On Friday, the dollar index was at 88.31. Now, the swing point that the dollar has been trying to go after for 7 months, it almost hit it. This is what your swing is. Your swing is $88.80. That swing is from the June 2010 swing. We got to 88.31. We'll see if this was basically the test of that area, and we'll see how we pull back. What we have done this morning is this. This is the first day that as DXZ4, as the dollar has pulled back. So watch what happened yesterday. Yesterday, the dollar had pulled back, but it had lighter volume on the pullback, rejected lower price. That's what gave us a higher high today. So watch what happened. we had established the November 7th high. That contract had 65,000 contracts. Yesterday, you come lower with 35,000, rejected it. Today, what you did, though, you got over the high of yesterday, which it would have took, number one. So now you have a higher price point, lighter volume, then a give up. Okay? So now what's going to happen, it's going to be how you come back inside the 86, 87 area. The 86, 87 area is the highs that were established on the 3rd. I think what you want to pay attention to in a huge way is that the differential here is pretty intense. And I haven't seen markets go tick for quite a while. Specifically, meaning that you had the tick for tick in the dollar index, tick for tick in the commodity index, tick for tick in the S&P. Let's go to Paul in Clearwater. Hey, Paul, what's going on?
Hey, Tomas, how you doing?
I'm doing great. You having a good day out there?
Yes, I am. Just want to wish you a happy happy Valentine's Day. I'm sorry. I'm just kidding. Happy Veteran Day from a soldier to another soldier.
That's a beautiful thing. Hey, this is Paul from the Salon Gaboa, right?
Yes, it is.
That's a beautiful thing, brother. Hey, man. I love it.
I was just talking to Bridget. I said, where's my brother from another mother doing today? She said you weren't going to be in the air.
I like that, man. Hey, and listen, folks, you know, Paul and his wife, they just bought this beautiful salon in Clearwater. It's Salon Gaboa, and my girlfriend Bridget works there. She's the best stylist there, right, Paul?
Yes, it is. Well, you got
You gotta love it. I'm telling you.
Yeah.
Well, listen, man. You know, happy Veterans Day. Thank you so much for calling. You know, tell everyone I said hi, and we're gonna have to go have a beer, man.
Yeah, I heard that. Roger that. And likewise, I wish you the best. You understand that because you were a soldier just like me.
There's no doubt. And so you were in the Army, right?
Yes, 36 years.
36 years. Man, you really did some time. That's a beautiful thing. Well, listen, man, we appreciate it, number one. I know you're an awesome person, period. And now you're on to a new career, building that team down there at Salon Gaboa. That is absolutely awesome, man.
Yep.
Cool.
Yep. We're going to get together. We got to get together and do some breakfast or lunch together.
No, we're going to do that. I'm going to have some more of your chicken.
All right, Thomas.
Totally, man. Okay.
All right, take care.
Hey, thanks for calling, man. Appreciate it. Have a great one. Have a safe one. And that's pretty cool, folks. So that's a great story too. Paul, he was in the Army for 36 years. They just retired, and they bought this beautiful salon in Clearwater. And if you're around here, folks, it's Salon Gaboa. You could jump online, give them a call. They will take care of you. Okay. Dollar index. So the correlation inside this dollar index is pretty intense because it is tick for tick. The edge that you can get out of this, okay, when you're looking at it, folks, is this. This is how it would go. What I'm looking for specifically is this. What we haven't had in the dollar index thus far is a pullback with expanded volume. And I suspect we're going to get that in the next couple days. And if that's what we get, what you're going to see is that you'll get just a normal pullback in the dollar index. You know, it can get you down to 83.99. You know, because we've had such an extension. The extension started, it went from 79.90 nonstop up to the swing point. So next few days, that's going to be crucial. You get a pullback on lighter volume, guess what? Dollar's going to go higher. And it's going to whack that swing point from 2010. Let's go to Rob in L.A. Hey, Rob, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Excellent. Thanks.
Cool, man. So, Hovania, right?
Yes.
Let's take a look at it. You got Hovania. They design, construct, market single-family townhouses, condominiums. They do business in New Jersey, North Carolina, Pennsylvania. You stay right there, folks. Rob, we'll come right back. Just a quick break, all right? Dow Industrials right now are down 11. You get NASDAQ up 4. S&P's flat. Gold contract is up 8.10. You get silver up 13 cents. We're going to be right back, folks.
The The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with our man Rob from L.A., and we're talking about Hovania. Hovania, folks, is a builder, does business in a lot of different states. The low for the year is 306. The high is 680. Now, do you own this? You're looking to buy it. What are we doing, Rob?
I actually I bought the February 4 calls yesterday for 44 cents.
That's a beautiful thing. Are you happen to be in Steve Rhodes' newsletter by any chance?
No, but I listen to the show in the morning, though.
I love it. I know, because Steve's into this, folks, okay? And, you know, he's got action in a big way. So what you did out here today, okay, you get, well, first off, so if we take a look at Pennsylvania, I'll bring this back on a monthly first so you can see what it's done. You know, yeah, you came back last month and you did 68 million shares. You got to a price point of 306. That 306, okay, was coming into 149 million shares, and you did it with 68 million, okay? So you tested the lows with lighter volume. Then what you have, and this is what Steve is going after right now with his subscribers, you're going after that high volume swing high at 531 from 505 to 531. And you got the juice behind the move, man. So what I would do is this. Your A point on this is $3.06. You know, your B is $3.90, so you get 90 cents there, which is going to give you $4.65, right?
Yeah.
More than likely, at $4.65, you get it. I would take half of your options off, so you got your money back plus, right? And then I suspect, you know, you're probably going to get this $4.95. See, $4.95 is the low of the high, and it likes doing that. But you got action here, man.
Okay, thanks a lot, Tom. Long-time listener.
Well, thank you so much. We appreciate you growling and prowling with us out here.
All right. Have a good one.
You too, man. And, folks, if you'd like to come to Steve's program, Steve launched a program yesterday. It's a 7-week training program with our man, Mr. Steve Rhodes. You can come over to our website at TFNN, and you're going to see it right on the front page. And inside that 7 weeks, you're going to have 2 3-hour webinars plus a follow-up each and every week. And all of that, folks, is only for $395. You can check it out right in the front page of TFNN. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, every trading day, Basil does an outstanding program right here, 11 to 12 Eastern Standard Time. Get all the programming, of course, at TFNN right on your cell phone, TFNN.mobi, folks. We'll get you the full stream. If you'd like to get the video with it, just go to TFNN.com, hit the TV on the right, top right-hand side, and you get the TV plus the audio. Basil Chapman, what's going on? Basil.
Yes, I'm here.
How you doing, man?
I'm well. How are you?
Good. Are you ready for that cold weather? I heard you guys are going to get some cold weather up there.
I'm never ready for the cold weather, but it's coming regardless.
I know.
Nothing I can do about it.
Well, I get, yeah, that's a fact. There's nothing any of us can do about it, no doubt. So I'm looking at the Dow Industrials here.
Yes, so this is the Dow, and as I mentioned the last time we spoke, that we've been long basically through the S&P because they have pretty much the same charts.
Okay.
And one of the things that I'm looking at here is this is still leg C, and the high today was 17,638. It's unbelievable. We're talking about 17,000s here. 17,638. And what is important about this is I had what I call a measured move. There's a particular technique that my subscribers know well. It's basically a cone formation that is declining. I call it a falling axe pattern. And what happens is that this red dashed trend line that's coming down here from the low of 15,855 can give you a measured move to the upside if there's a certain kind of a breakout, which there was. And I said if that's the case, then we should have a measured move that takes us to between 17,590 and 17,620 based on this particular measured move. The measured move is really, it doesn't say that that's where it has to stop. It says that if everything works out according to plan, that's the expectation that you can have. So since we're still in leg C, and my anticipation is there's a really good chance that tomorrow you can see that the candles, see the distance, the intraday high and low of the past 4 candles, 5 candles actually, have shrunk, and there's this tiny little plus sign, little doji candle where the Dow opens and closes. To me, that's a sign that says it's getting a little tired. It's making just nominal new highs. It's working really hard. We should get some kind of a pullback. So I'm expecting a peak C, probably tomorrow or Thursday, and then we should have a push to leg D. That's where I need to become quite a bit more cautious. We actually we only have long positions in my opening call, for subscribers. And what's really important is that the stochastic is actually at 99%. That's about the highest you can get, 99%.
Okay.
And that says that at some point, there's only one way to go, and that is down. Now, what we have seen periodically is that the stochastic pulls back, and the price holds up. So we're going to be watching this really closely. All I've been saying, and in fact, I went through it on my show this morning. There was a discussion, a question about the chart patterns that are. The question really is this chart pattern in the Dow any different to any others? And if I show you this chart here of the, if anyone wants to, they can listen to the archive of the show. But basically, I showed that the October low from 71.97 back in October 2002 to the high of 14,198 in 2007 had an up channel. We're in an up channel now, so the fractal, the design, the pattern itself, there's really not much difference, except I was explaining that we have been trading in the upper half of this particular up channel. That makes a little bit of a difference. But if you look at the stochastic and the MACD, they're chopping around. They're doing pretty much the same thing. So this channel is going to be really important coming into November and December. So what we've done is we've remained long. And if you remember, I said that we were long the IBB, that's the NASDAQ Biotech ETF. We were long via the 200% BIB. It's called the ProShares Ultra NASDAQ Biotechs. And we've had some really good gains. And we got back in again at just about at the low on 2 days ago. We got back in at 106.29, and the low itself was at about 114, 113. So we've got a nice little profit here, but my expectation is that there should be a leg C to the upside, because in the Chapman Wave methodology, that's what we look for. This 120-minute chart over here shows this is the pattern that should unfold. But I'm a little cautious here because the 120-minute chart has not gotten close to the 121, 122 level, which is really important. So I'm going to be raising the stop so that we don't take a loss, but I'm not sure exactly how this is going to unfold for the rest of the week. But because the S&P and the Dow are in leg C with a potential peak C coming, and the QQQ series is already at leg D, I'm thinking that we're getting really close to some kind of a pullback, but it'll be based on the daily. Now, we've spent a lot of time, some people can listen to my archive of the shows, I've been discussing the weekly charts, and what I've said is to make this particular move that we had from the October 15th low to this spiral rocket ship higher in one single move to break out to new highs, and in some cases all-time highs, is something that's very important. I hear the break coming up. So the most important thing is 17,000 must hold on the Dow in the next 2-3 weeks. That's critical for me. So we'll be negotiating the next few days very carefully as we travel to hopefully a PT in the Dow.
Basil, thank you so much. Have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom.
Come right back, folks. Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 18. NASDAQ is down 1. S&Ps are off fractionally. If we go to Alibaba, folks, and if you want to see an equity that, you reach an ABC structure on the way up, you start pulling back. Alibaba's what it's all about. But check this out. This is pretty cool. So, Alibaba, it's down $4.61 today, trading at $114.55. Now, watch this when you take a look at this. Okay, so we had broken the B point, broke it with volume, did the ABC structure on the way up, and it's good that it did not do a 1 to 1.618. It hit 119.45. So what that did was about a 1 to 1.50. Now, you hit that high, folks, with 75 million. You're coming off that high with way too much volume. So you're coming off with 66 million shares right now. We'll probably end up doing about 70 million shares. Now, what that sets up is this. That sets up a larger retracement. Okay? So, retracement-wise, this can hit $99 in a heartbeat. It's important to understand, because when you come off the highs and you have volume behind coming off the highs, you're going to basically have a larger correction than normal. So, as as we come down into those lower levels, you want to keep an eye on this, baby, because when you start doing ABC structures right off lows, well, right off just coming public, this thing can do ABC structures for a long period of time. You know, so you first get-go, higher volume. What I do expect you'll see on a basis, though, as you get down to lower price, you'll see the volume contract. More than likely, it would be hard to buy, but the bottom line is that I suspect that it will probably have multiple ABC structures on the way up. So we'll see where that whole thing does shake out. But that's what it looks like that's happening at this particular point. When you do go to the housing industry, you know, we're just talking about Hovania. Bottom line, folks, and here's a gift, and this is a big one. Lennar, okay? Lennar, L-E-N, as in a monster ABC up. I mean a monster, too. This housing business is going to the moon right now, folks. On a monthly basis, what you're going to do, it's a monthly ABC structure on the way up. You're at 46, and it looks like 65 is game. You know, you're going over the swing points. You have on the weekly taken out. It's a big ABC structure on the way up. And what that does, what I expect you're going to see is the correlation of these interest rates are going to stay low. That's what it comes down to. The world has low interest rates. They seem to be going lower, and free money, folks, is something that pushes the housing market around. Let's put it that way. What you also, I suspect, will see here is the formation of houses, and this is where this whole, you know, 30, 35, the next boomer generation that is actually bigger than the baby boomers, that's what you're going to see start kicking in right now. That's what it comes down to. Let's go to Lou in Nashua. Hey, Lou, what's going on?
Hey, what's happening, Tom?
How you doing, man?
All right, hanging in there.
Good.
I'm thinking of buying calls and silver, or gold.
I'd go with gold before silver.
Yeah?
Yeah.
Okay, what kind?
What silver hasn't done yet, okay, is had a nice sign of strength. You know, it's just hanging down at these lows, you know.
Yeah.
Gold has. You know, gold, you know, the last 3 or 4 days have been dynamic in that gold business. Watching it out here today was pretty cool because you got underneath those lows that just rejected that price, and you can just see it push, push, push. You know.
Have you got a price target for it?
Well, what you have is this. The correlation, let me pull this up and put the volumes behind this. So your first resistance is really going to be at almost 1222. You know, right? The first resistance actually would be 1202. 1202 would be the first resistance. You know, you make it through 1202 and you'll blast to 1250 in about a heartbeat, man. You know, so it depends on how far you're going out here. You're going to go calls in the future market, right? Is that what you're doing?
That's what I'm doing, right.
Okay. And how long are you going to go out? Just this month?
I'll probably go out to, probably February or March.
No, I think that's a good trade. You know, what you have is that this dollar. You know, the other side of that, man. You know, you can wait till tomorrow, or the next day, too, Lou. Because what's going on is this: I expect what you're going to see is that dollar come down with some volume, and once it comes down with volume, two different things would end up happening. It would be a higher probability that the dollar run of the last 7 months is going to be over for 4 or 5 months. You know, and it's going to back down because the run has been extraordinary.
Right.
You know, and if that's the case, you can have plenty of room, plenty of time to get in that market. You know, the equities themselves have been acting pretty good, you know, but we did see a few of these equities. Well, if I look at, like, I really like the stock, but I didn't buy it, and it's PAAS. And this is why inside the silver market, Lou, it's kind of like, oh, man, what's going on here? So PAAS had a great sign of strength last Friday, which a lot of them had, right? It goes up on 3 million, and then all of a sudden yesterday it goes down on 3 million. It's like, oh, man, okay, hold it. This ain't ready yet. You know what I mean?
Right.
And today it's only up on 1.9. So when I look at that and then go over to the gold market, the golds really, you know, didn't pull. They pulled back on price yesterday, but not on volume. You know, so that's telling me that, listen, the gold market is stronger than the silver market, and what you do have on a fundamental basis is that because silver is such a huge byproduct of the other minerals that are mined, it makes a big difference. You know, and these other, you know, base minerals have got hurt, you know, so. Cooking, brother.
Sounds good. Thank you.
Okay, man, have a great one. Stay warm, too. I heard it's going to be, we get a cold front coming in, and it's, I mean, for all you folks out in Minnesota, man, I guess it's snowing like crazy out here. There's no doubt. Some of the, oh, here, so check this out. Big Blue. Big Blue, folks, is a mess. Big Blue right now, it's a flat market out here in Big Blue. But only Big Blue could get away with this. So picture this. Big Blue's been buying their shares and blowing the shareholders' money for a long period of time. And then they come out this morning. Big International Business Machines Corporation doesn't plan to lock itself into another precise earnings forecast after ditching its long-held goal for the 2015 profit. Chief Financial Officer said IBM is unlikely to put in place another absolute earnings per share roadmap. He said there's still value in laying out the complex strategy for investors. The reason that they're not doing it, folks, okay, is they're used, basically, they've been managing their earnings, okay, for about 5 years. As they're managing their earnings, which they've done, is that they've used shareholders' equity to buy the equity and hold it up. Well, guess what? That's all. The game's over. Okay, they held the stock in the same spot from June of 2011. Now it's toast. It came down last month with monster volume, and the writing's on the wall. And the writing on the wall, folks, is Big Blue wants to run down to 116, and right now you are at 163. That's a big number. And if you don't remember, well, here, I'll bring this up. If you don't remember, the thing that's amazing about Big Blue is the aspect that, you know, this company is one of the best companies in the world, number one. But management-wise, they almost manage themselves as a bankruptcy. Okay, it's just amazing what ended up happening, you know, to Big Blue. I mean, Big Blue was trading at $12 in 1993. Okay, you know, they made it back because what they did is that I believe the way they made it back was the fast chips that they actually developed. They came all the way back from the death keel. Hopefully, I know when I talk about our man, Mr. Dave White, on the Tech Hour on Friday, they have a couple things in the can that will take them a period of time to come out with. But in between that, I suspect that Big Blue wants to go a lot lower. So, and the amount of expenses when you're carrying 400, there's a 400,000, yeah, 431,000 employees. That's pretty intense. So they have a lot of moving to do, and we'll see how fast they can continue to move and to do something about that. We go take a look at the small caps out here. With the small caps are the only indice thus far that hasn't made a new high. It's up slightly today. The IWM, the high is 120. Right now we're 117.38. What will be interesting here is that as the dollar pulls back, a lot of these small caps are commodity types of stocks. Inside the commodity market out here today, and we get some juice and soybeans, sugar, orange juice, coffee. And don't forget, today, today's a beautiful thing. We got our man, Mr. Andy Hecht, coming up from 5 to 6. You stay right there, folks. We're going to be coming right back. Dow Industrials are down 3. NASDAQ is up 7. S&Ps are up $1.50. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now flat. NASDAQ is up 8. S&Ps are off $1.50. And what you're going to see out here tomorrow, you know, we've been talking about this. So you got the currency LIBOR deal, folks, okay, that is going to involve some of our own banks. It's involving the banks in Europe. And the amazing part is that it's like, you got to be kidding me, because the amount of fines that are coming out, when I say you got to be kidding me, it's hard to comprehend that these banks can keep paying $300, $400, $500 million and still make money. You can just see that basically how non-transparent the banks actually are, and the type of bread that is coming into those banks, because the preliminary indications are that the first fines that are going to be coming out of the European Union are going to be basically $350 to $400 million. And that's just only going to be the beginning, folks, okay? And in this particular case, you know, they all were yapping about the mortgage-backed securities in the United States and saying, oh, we didn't do this, we didn't do that. And the bottom line is they paid billions and billions of dollars. I can't wait to hear what they're going to be yapping about this time. Because this time, flat out, this thing's going to go on 5, 6, 7 years. I mean, that's the way this is shaken out. Why? Because the LIBOR rate in particularly because the time frame that we're talking about here had to do with the mortgage market in a huge way. So there's hundreds of thousands of people that probably were paying more on their mortgages because of the manipulation and basically fraud inside that market. The amazing thing, of course, is that inside the banking structure, there'll be no one that pays for it, you know, outside of the amount of fines. There's no doubt that a pen is much, you know, that whole thing about a pen versus a gun, yeah, the pen really does it, folks. In this particular case, now the computers can do it. Let's go over to the XLE. So here, well, first we're going to go to oil. We take a look at the oil market out here today. This is CLZ4, CRB. So oil out here today, crude oil out here today. We're dealing with the F contract right now. Okay, so it's 77.59, and we've done. Oh yeah, way too much volume. We're still going lower. We're still going lower. Oil wants to get into this $70 level. Okay, so right now we've done 108,000 contracts today. You know, you're going against 128. You know, that low out there is the 75.95. We've only hit 76.41, but the way this is set up, it wants lower price. We go to the XLE. We take a look at the XLE. That's up 23 cents today, but that yesterday it kind of proved itself. It got to 88.96. It couldn't handle that higher price. XLE wants to go test this $77 market. I want to go look at GoPro. Let's go look at GoPro here, because what we have with GoPro, GPRO. This is slick what GoPro is doing, folks. So GoPro is down only 57 cents today. Don't touch GoPro, folks, okay? This is going to be wild watching this shake out, but the guy running GoPro, he not only built a great product, that he knows how to trade a stock, too. So watch what they're doing. Well, first off, what they had done is this. They had got a temporary relief from selling, he did specifically, for selling some shares inside a trust. And I believe it was J.P. Morgan that let him off the hook, to let him sell them. Now, the lockup period, okay, is another few months. But what they've decided to do in between that is that GoPro just filed for a secondary offering to raise $800 million. And this is what the press says, press release says, as it expands the business and works to temper stock swings ahead of a share lockup that expires next month. Do you see how it says, as it says to expand the business? It's not going to expand the business, folks, okay? This is all insiders insiders selling prior to the lockup, which is on December 23rd, okay? Okay, the maker of the wearable cameras went public in June, said in a filing today that a lockup of its shares will end on December 22nd. Investors who sell stock in a secondary offering will be locked up for another 90 days. Big deal from cashing in their holdings. This is about as good as you get. Do you see what that sentence is saying? They can sell today. Well, big deal. They can't sell in 90 days. 90 days after the lockup. All they want to be able to sell, folks. I plan to be a significant shareholder in GoPro for a long time. Woodman wrote in an email to employees that was included in the filing. He added that the secondary offering will raise about $100 million to help invest in people, products, potential, and acquisitions and infrastructure. The $800 million figure in the filing is a placeholder that is used to calculate fees and may change. GoPro shares have more than tripled since June 25th. So watch how this works, folks. This is really important to grasp. The filing, it's a shelf filing, is for 800 million shares. The SEC, they put these through in a second, which they should. Okay, the people can sell whenever they want to sell. The key to get your head wrapped around is that at any second of any day, all the rest of those shares will come out. They don't do a secondary filing for 800 million shares unless they're going to sell them. And I wouldn't I wouldn't be going short GoPro either, but yeah, there's a 39% short position in GoPro right now. 39%. That's pretty intense. But GoPro does want to trade down to this $40 level, and we'll see just how that works out. It's going to be pretty amazing. But as to managing the stock, manipulating would be the wrong word. Massaging the stock, yeah. They're doing a really good job of it. There's no two ways about it. Some of the higher volume stocks out here today in a low volume market. You get Juniper Networks down a $1.23. Intel is, let's see, that's flat. GE is off 11 cents. You got Rackspace up $4.83. Some of the Dow stocks out here. Marvell is down 35 cents. American Express is off 68. You got Coke up 12. Oxy is up $1.10. Walmart is down 43. 3M is off 61. Not a lot of action out here. Volume-wise, what we'll end up doing out here, folks, is about $550 million on the NYSE. We take a look at the NASDAQ composite. The composite looks to do, well, it's not going to be that bad for the composite. We're at 1.5 already. It should be much higher than that, but the bottom line is that that's not that bad. It looks like it's going to close out at a high. Coming up the next hour, folks, we're going to have our man, of course, Mr. Andy Heck. We're also going to have Tom Joseph. Tom Joseph, folks, is the founder and developer of Advanced Get. And he also, he just opened up, well, in 2004, he opened up another company called Dynamic Trend. You stay right there, folks. I'm going to come right back. Excuse me. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. I want to wish everyone a happy Veterans Day. It's a beautiful thing, and thank each and every one of those young men, women, older young men and women for that service to this great country of ours. This quote is by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up $1, NASDAQ up 8, S&P's up 2.5, gold contract up $4.70, trading at $1,164 an ounce. Silver up 4 cents at $15.71 an ounce. Platinum up 8 at $12.06. Copper up a penny at $3.03 a pound. Light sweet crude up 13 cents, trading out at $77.53 a barrel. We have the bond market closed out here today. King dollar down 296 ticks at 87.61. The euro up 56 at 124, and the yen up 57, trading out at 115.43. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world. In the world of the S&P, what do you have? You have another day or another high. We're at 20. 39 hit 2041, and this has been a hit 2041, and this has been a one-way trip. No two ways about it. On the 15th, you were at 1820, and we're 219 points higher without basically a pullback. Not even close either. Volume-wise out here, 600 million versus 716. Dow Industrials, what you have with the Dow Industrials, also at a new high. Dow Industrials closed at 17,614. The composite, NASDAQ composite, that is also at a new high. That's up $8.93. You're at 4660. That closed over its highs also. We did 1.6 billion in the composite. If we go to the SPY, we take a look at these correlations inside the ETF structures. What you have with the SPY, we did 51 million shares, and that is about as anemic as you can get. Well, of course, you can go do 51 million less. Bottom line is that you have no volume. You're at these highs. They're buying the product. No one's in the store. Dow Industrial, same setup in the Dow. NASDAQ, the NDX 100. NDX 100 had 14 million shares out here today. It's over a swing point that had 25 million shares, and we had come down on 108 million shares. So you can see the type of market that we're in out here. Inside the NDX 100, putting juice into the NDX 100 today was Vodafone. That was up $1.78. You had Priceline up $47. We got to look at that. I got to see that one. Tesla was up $9.15, and you had REGN up $12.34. Bringing the composite, the NDX 100 rather, down is that you had TripAdvisor down $2.90. Mattel was off 74 cents. You had Verzak Analytics off 98 cents, and you had Activision down 31 cents. If we go back to Priceline for a second, let's see what's happening with Priceline. So Priceline was up $47. Oh, that's after getting toasted. I see. Okay, so Priceline's off its high at $13.50. You're at $11.60. You had gapped up to $12.29. Gives it up on volume. Just it's filling the gap right now inside of that. What we did have out here also today, folks, is that Alibaba finished its ABC structure on the way up. Alibaba ended up closing 4.5 points down. Now, that closed down with some juice behind the move. So Alibaba's going to go lower, come down at 70 million shares. Yesterday we had made a high up there with 75 million. That's way too much volume coming off that high. What Alibaba had done, however, is finished the whole price projection of an ABC structure on the way up. And it did a 1 to 1.50 ABC structure on the way up. So nice expansion on the way up. This can pull back to the $99 level in about a heartbeat. Some of the Dow stocks out here, what you had, American Express was back 66 cents. You had Caterpillar up 32. Oxy was up $1.18. Now, let's go over to the, let's do gold first. We go to gold. We take a look at gold. What you have with gold is this. Rejection of lower price, had lighter volume. We need a few signs of strength, no doubt about that. We're at 1164. It got to 1172. The dollar index, folks, is the name of the game. What you have with the dollar index right now is this. This was the first day that the dollar actually, the index itself, got to a higher high, gave it up, meaning it had a higher high, tested the highs of yesterday, tested basically the high bar of the 6th and 7th of November, and then come lower. Every pullback thus far since July 1st has been on light volume. I suspect what we're going to see here is a little expansion of volume. If we get an expansion of volume, that would be saying that we'd have a correction after this run higher for the last, basically, that's 4 months. So we'll see how it shakes out. The reason I'm saying that is that intraday yesterday and intraday today, tick for tick, the dollar, if the dollar was going up, market was going up, gold was going down, metals were going down. Tick for tick, dollar going down, guess what? S&Ps were going down, gold was going up. And it's really unusual when the tick for tick was going within the correlation of 2 or 3 seconds, not even minutes. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom, you mentioned Tesla. I was looking at that. What do you think?
Let's take a look. We got Tesla. I wouldn't be shorting Tesla, if that's what you're thinking.
That's what I was thinking.
No, don't. You got a 24% short position, so there's 20 million shares that are short out of 125 million, okay? You know, we're at 251. It wants to go up and test. Well, it's right there right now. I see what it's doing. Interesting. It's testing what it should be testing right now, which is a 249, John. But with that many shares shot, man, it's just way too dangerous. That's 24 million. So 1 out of every 4 shares, okay, has to get bought back. Well, here, is that right? Yeah, 20. Yeah, 24% short position. That's just way too much, man. Do you know what I mean? They'll be able to keep that up for a while.
This market's driving me crazy.
Listen, that's a very easy thing to do when you are a bear like I am with no claws. There's no doubt. Yeah. Don't shot Tesla. Okay, man. Have a great one. Have a safe one. If we're going to take a look at the financials, the XLF, we take a look at the XLF out here. XLF today, higher high. You hit 24.31, and what you will see out there in the next few days, and I'm not sure which one of our banks will get fined first. I believe what you're going to see out here tomorrow, the LIBOR scandal, folks, okay, and the fraudulent behavior of the banks. Tomorrow what you're going to see is that the European Union, they don't control our banks, but they're going to be out there with... Yeah, here it is here. Okay, so the United States, we are the United States, the UK and Swiss authorities are preparing to levy their first penalties over the foreign exchange manipulation against at least 6 banks tomorrow. They expect that, let's see, the U.S. Commodities Futures Trading Commission and Office of the Comptroller of Currency may also announce penalties tomorrow. Barclays, Citigroup, Citigroup's involved, or J.P. Morgan Chase, so they're all out there. So Barclays, Citigroup, HSBC, J.P. Morgan Chase, Bank of Scotland, UBS are going to be fined. Check this out. They figure the average just tomorrow, and this is only the beginning of the deal, is going to be $357 million. So what is that, 1.6 billion? Bottom line is this is part of doing business right now. So we'll find out how their public relations are going to spin this baby. But bottom line, folks, okay, I expect what you're going to see, this is going to be going on for a long period of time. But you can also see, the reason I'm bringing this up, you can see inside the XLF, it's not doing a thing. There's no doubt, you know. So what that says, number one, is what? Is the amount of bread that banks make is absolutely incredible, that you can pay, whether it's $200, $300, or $400 million every 2 or 3 months in penalties and still have billions and billions. This is Tom O'Brien. This is TFNN. You stay right there, folks. We got my man, Mr. Andy Heck, coming up next. Then we're going to have Tom Joseph. Tom Joseph, who's going to be talking about dynamic trend. He's going to be talking about Back in Black on E-Signal, coming this Saturday from 9 to 1. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now let's go over to our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday and Thursday, Andy has an outstanding show right here, 5 to 6 Eastern Standard Time. Also has a great newsletter. It's the Technomento Commodity Report. The way you can get it, come to our website at TFNN, go into newsletters, trading newsletters. You see the Technomento Commodity Report right there. Andy Hecht, what's going on?
How you doing, Tom?
Doing great. You having a good day?
I'm doing great. Hey, first, happy Veterans Day to everyone out there, and thank you for protecting our way of life, and a happy belated birthday to you.
Thank you so much, man. I got it made. My birthday is November 9th. Marine Corps birthday is November 10th, and I get Veterans Day today. How good is that?
You got a 3-day holiday.
Now, Ann, hey, listen, what do you think? I mean, you know, it's going to be interesting to see what happens with the dollar index, man. You know?
I agree. I agree. And you know what? I mean, the dollar index is real. The dollar, just the direction of the dollar. We're up. You know, we're up near very key resistance points at around the 88, 89, 90.
Yep.
So it's going to be very interesting to see what happens. And I think, you know, look, gold's trading tick for tick with the dollar index here.
It was a mind blower, man. I'm telling you, Andy. Intraday today, folks. Okay, I was on that Nadex platform intraday, and I'm telling you, man, I was watching it and I was digging it, folks, because what was going on, and this has happened about the last good 3 or 4 days. It was tick for tick, not only in the S&Ps, but in the metals too. And you know, it's normal in the course how things used to be years ago. It's not normal in the course of how things are and have been, though. you know.
That is true. That is true. The only thing that concerns me about the gold market is the relative weakness of silver and platinum. You know,
no, silver's a dog. I know, man. Today. I know. I agree. I know.
Yeah, I'm concerned. You know, look, I mean, this is not a predictor, but if you look at the long-term norms in silver gold ratio, 55-1.
Yeah.
That implies a price of gold here at like $860. Platinum, the long-term norm, $200. It assumes, a price of about $1,006. So I'd love to see these things rally. That's what would get me more positive about gold. But until, these other precious metals can do something, gold is on its own here, hanging up.
Yeah, which is dangerous.
It's always dangerous. Yeah, it is. That's the perfect word.
It's
dangerous.
Always dangerous.
Hey, let's talk a little bit about grains.
There you go, soybeans.
Yeah, exactly. So the USDA released its monthly World Agricultural Supply and Demand Estimates report yesterday.
Yeah.
And what they said basically, first of all, it was kind of bullish for corn. They trimmed the total corn crop a bit. They trimmed the inventory numbers a little bit. But soybeans, which came in around estimates, very interesting. Increasing exports for soybeans here. There's increasing demand for feed and for exports. Actually, exports.
This looks like an ABC up to 1125.
Yeah. And look at the daily chart. You got a key reversal today. The only thing that concerns me there is that both crops, corn and soybeans, are at record levels.
Yeah.
And that if you look at this second metric here, open interest.
Okay.
Open interest has nosedived. I mean, it's gone from like 821,000 contracts a few weeks ago to 660,000 contracts. That tells me a lot of shorts have been washed out of the market.
Okay.
So, and we have to keep in mind that even though
of course, the way they get washed out,
their estimates, both crops, corn and beans, are at record levels this year.
Right. And what Andy's saying, folks, is that the way you get washed out, meaning that they had to close the contract. Okay, so
right, they had to close their shorts because the price went up, and they started. Well, a lot of them got in at very, very high levels, so they're just taking profits.
Sure.
Right. So also, the other thing that I'm looking at here is coffee and cocoa. Look, with these commodity markets lately, they've been in kind of downtrends, and they have looked ugly. But I think coffee and cocoa are putting in some nice bottoms. There's some good action today in the coffee market. We have to remember that there's still, dry conditions in Brazil from last year. There's still leaf rust in Central America. Coffee plummeted. I mean, down 20% in a matter of a couple of weeks, from $2.25 a pound down to $1.80 a pound. So I'm looking for a relief rally there. We also have a nice gap here on the charts, up around the 206 level. So I'm looking for recovery there. And in cocoa, we also have a gap on the charts, and we have the same thing. I mean, we had the prices plummeted when everyone bought on that Ebola news, but demand for cocoa is still very strong in Asia. So I think we're down in the buy level, and that's been acting nicely lately. You have to be very picky about the commodities to go long here. You really need to pick things with good fundamentals.
Well, let's talk gas then, natural gas.
Natural gas, man. That is the weather trade of the century, right?
Well, it's amazing.
In Minnesota today, huh?
Man, Dave White told me that only 6 states are not going to have snow over this weekend.
That's unbelievable.
That's unbelievable.
The nation. This is coming from Tropical Storm Nuri that formed off of Japan, and like the stars lined up, it got injected with some Arctic air, and it's dropping down, and it's cold. Man, I'm glad I'm back where I am now compared to where I was last week.
That's a fact.
Natural gas. Look, if we're lucky enough, we're going into the winter with low inventories.
Okay.
6% below last year, 6% below the 5-year average. I did a little bit of work and found that over the last 11 years, only 5 years have we gone in with inventories this low.
Really?
And the lowest high price of those 5 years was $8.
Wow. Okay.
So I'm hoping that we can go back and fill this gap. Maybe we'll get a little warm spell at the end of November, fill this gap down at around just under $4.
I see it.
And that's where
$3.94. I got it. I see it right there. Right.
Yeah. I mean, but hey, that market looks good to me.
Yeah, no, listen, it went into the swing. It took out, what it did, folks, is that, you came up to the swing on the 5th with volume. You blew it away with volume on the 6th, and now you backed up with lighter volume. Today we only did 74,000 contracts versus 130. And that's
exactly. And if you look at the chart, Tom, you had a key reversal day last Thursday after the EIA numbers came out to the upside. And yesterday you had a key reversal to the downside.
And
that's telling me volatility with a capital V.
Oh, it's in spades, man. And what is out here, folks, is this $4.82 to $5, man. I mean, the way it went topside, that's where it looks like it wants to go, man. Yeah.
Oh, and Tom, if we get up there, it's going to look a lot higher because of, the number that comes out this Thursday from the EIA is going to be very telling. The last one, there was an injection of 91 billion cubic feet. And that ended, that was a report as of October 31st. Now, I was on the Northeast on October 31st. That was the first day it got cold. So this week will reflect a little bit more of the colder temperatures. Not what we're seeing this week, but what we saw back Halloween and the 1st of November. So it'll be very, very interesting.
And you know what happens too, folks, is that when the cold comes in this quick, everyone is used to. I can personally, maybe it doesn't have to everyone, but when the cold comes in this quick and you're going from hot to cold, you normally put your heat up even further than you normally need it, right? Because
that's right. Two things happen. A lot of people get sick, and the other thing that happens is your blood thins out, so it's cold. It actually feels colder than it is.
It is, man. Well, listen, you have a great one, safe one. We look forward to the show coming right up after I'm getting off here.
I'll see you at 5.
Thank you so much. You stay right there, folks. We got our man, Mr. Tom Joseph, coming up next. We're going to be talking Back in Black on E-Signal this coming Saturday morning.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish flat. NASDAQ was up 8. S&Ps are up 2.5. Our guest today, folks, a dynamic guest, and his name's Tom Joseph. He's the creator of Advanced Get software. Now, Advanced Get, depending on how long you've been around, folks, okay? Bottom line, this was selected the #1 trading system for 12 straight years, in the futures market for 11 years, in the equities market by Stocks and Commodities magazine. Tom then sold this to eSignal. If you happen to be an eSignal user, you get to use this software on a continual basis. And he started in 2004 Dynamic Trend, okay? Dynamic Trend, what Dynamic Trend is all about, folks, is what? It's a comprehensive option analysis platform powered by eSignal. Now, coming this Saturday morning, okay, and this is free, folks. You can go to eSignal.com right now. And what you're going to see on the very front page of eSignal, go under Education, and what you're going to see is Back in Black. And coming this Saturday morning from 9 o'clock to 1 in the afternoon, there's dynamic speakers. And when we're talking about the eSignal platform, when we're talking about Dynamic Trend, Tom's associate, Ron Wheeler, is going to be doing a workshop from 11 to 11:30, and we're going to be talking about creating high-probability option spreads using options. Tom Joseph, welcome to TFNN.
Thank you.
So, Tom, let me ask you, what is Ron going to be teaching the eSignal clients this Saturday morning?
Ron is right here with me. Ron, you want to step in?
I will. Hi, this is Ron Wheeler, and as you mentioned, I'll be the one teaching this Saturday. I'm going to be using a combination, really, of Tom's greatest hits, the advanced get strategies to find high-probability Elliott wave trading.
Yes.
And then I'll be combining that with some of the new options things we've come up with here at Option Dynamics for creating spreads to really increase the chance of success on the trades.
And, you know, when we're talking spreads, are we talking spreads now in the equity market, the future market? What type of spreads? And, of course, you're talking bull and bear spreads, right?
Correct. We're going to focus on the equity markets. We'll be putting together bull put spreads, bear call spreads. I like to do the spreads in conjunction with what the current market is doing. So right now we're bullish. I'll probably be constructing more bullish spreads than the bearish at this point.
Yeah. And, Tom, when you basically put together Advanced Get, what was the passion behind it? And you know, I know the program is dynamite, and you know, there's plenty of computers now, but when you put this together, the computer age is really just starting in computers, not you know, in trading, let's say.
Yes, you're absolutely right. But when I first started trading, I had CQG, and for trend lines, I used a string with two pieces of bubble gum on each side of my chart. From there, we created an Advanced Get. That was a long time ago. It focused on Elliott wave analysis. Elliott wave was a very prominent analysis at that time.
Yes.
But it was very hard to for a normal trader to understand and utilize in real time. And we computerized that and made that available in our Advanced Get program.
That's interesting too, because it seems that the Elliott wave, when like anything else, when it really goes, it goes well. But it seems like there was a good amount of backing into an Elliott wave curve. Well, let's put it this way. Different people did different things with it, right?
Yes, sir. We just focused on the one portion that was very clearly identifiable. And so the rest of it, we just left it alone and only focused on stocks or futures that had the wave 3, wave 4 situation. And that was very easily identifiable.
Oh, isn't that cool? Ron, so when you're teaching this coming Saturday, and Ron's going to be on, folks, okay, from 11 to 11:30, and you know, the option market in general has changed so dramatically over the last 15 years. You know, you have penny-wide pricing right now inside the option market. Does that make your spreads easier to put on, Ron?
Yeah, very much. It's easier to find good pairings. You know, the bid and ask being closer together makes the reward risk a lot more advantageous. It's a much better marketplace.
You know, as I'm going through dynamic trend, you know, there's no doubt the inside the option market, it's all about decay, right? Can you talk a little bit about decay and what that means to an option trader?
Yes, the decay can work in two different ways. One, if you're just outright buying the call, you got to be careful about the decay because every day so much of the value decays out. But at the same time, if you're selling a credit spread or if you're selling a covered call, that decay can work in your favor as well. So it's a two-edged sword.
Yeah. And are there any types of, you know, if we're talking futures or we're talking equities, are you prejudiced to any type of vehicle there?
Meaning talk about in relation to options?
Exactly. Like, do you like trading the Qs? Do you find spreads are better in the Qs, better in the actual, what's American Express or an equity and or the futures?
Yeah, definitely a lot more volatility
in the Qs.
In the Qs.
Okay, right, yeah. Because it's amazing watching the transformation the last 15 years in the markets. And you know what I've found? It's interesting. It seems like the dynamic changes at certain points. You know, I mean, whether I see you have a sector tool on here also. You know, and it's like the XLE right now. It's amazing. Everyone's talking about the volatility inside the energy. You know, the XLE, that's down 20%. So it's pretty amazing, you know, watching how a sector can basically fall apart.
Exactly. The sector plays a big difference. If you trade in the direction of the sector, you have a more profitable situation. So we follow all the sectors and the groups and identify the strong ones or the weak ones. And if you're buying, you would just go into the strong sectors or groups. If you're short or selling, you would go into the weaker ones. So by using that, it kind of moves you in the right direction dynamically.
Yeah, and you know, I'm looking at between the advanced option chains, the option decay tool, the spread select. The spread select, is that giving you the best risk for reward ratio?
Well, it's showing all of the individual spreads that you can create with it. It does it by credit, does it by risk, so it does put those in order, yes. And we're going to be using that in our presentation on Saturday.
Nice. And folks, the way that you sign up, you come over to eSignal.com, and when you're on the front page of eSignal, what you do is you're going to hit education. As you hit education, what you're going to see is it's going to come up and say it's going to be back in black. You can sign up right here, right now, absolutely free. You can take a look at some of these workshops. Number one, the software that is involved is pretty incredible. So when you're basically putting either sectors, cues, spies into the eSignal platform using the dynamic trend, is it giving you the most probable trades that are coming up? Or what is exactly does the dynamic trend do?
Well, it's two parts. Yes, the answer to the question overall is yes. It's going to give you the most, probable ones. What we're going to do, and this kind of gets into what we're going to talk about Saturday, I'm going to start with the advanced get scanner to find the underlying Elliott pattern that Tom mentioned.
Okay.
That's profitable 3, 4, 5.
Yes.
And then what we're going to do is we're going to take those results and we're going to put it into the options analytics to find, first of all, we're going to talk about the volatility.
Yes.
Because, it's a good stock trade. The stock's going to go up or going to go down based on the pattern, but now we got to put it in the right options. Are we going to do just buying calls, or are we going to do a bull put spread? We got to figure out if it's got low volatility, high volatility, and we're going to take it from there from the option side.
That's pretty cool, man. That's hey, Tom, when you're looking at your system right now, between the advanced get, then you put your second system in, which Ron was just explaining, it's a great accomplishment in the course of 15 years. What's going to be next?
Well, I guess auto trading, where you just start it in the morning and let it trade by itself.
Yeah, it's interesting what has happened. What's so cool? There is no doubt that the options, I know you guys have been around forever in the option market, and folks, years ago in the option market, okay, the disclosures in the option market are unbelievable, okay? And I was always saying, man, it's amazing that the equity market never had that. The equity guys get away with murder, right? You know what I mean? It's on a continual basis. Oh, you buy, JDSU at $200 and it goes to $3, but yet the option market, do you remember? Or the continual basis, options, you lose money. It's like, hold it. Options are defined risk. Now, that has changed even in the perspective of the public relations in the last 10 years, hasn't it?
It sure has. And you're getting a lot of interest, though. A lot of traders are coming in, especially the new traders are attracted to the option side.
Yeah, well, it totally makes sense. When you can trade the Qs for, basically dollars at the money options versus $100, you can see that dynamic. And, of course, the defined risk is absolutely huge. Well, listen, Tom, Ron, thank you so much. We look forward to hearing you, Ron, Saturday morning.
Thank you.
Okay, have a great one. Have a safe one.
You too.
Thank you. You stay right there, folks. We're coming back. Folks, go to eSignal.com. You'll hit education, back in black. You can sign up right now. It's absolutely free. This coming Saturday morning, 9 to 1. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow finished up 1, NASDAQ up 8, S&P's off 2.5, and of course you had the banks closed out here today. We do want to wish all the veterans happy Veterans Day and many more. Market-wise out here, what you have, if we go over to the UK first, we take a look at the UK. What you have with the UK is this. UK is up $16 today. We're at 66.27. That still can't get any juice. So it's going to be interesting to see how this does shake out. Right now, we're coming up to ICE, which is 65.88. Actually, it's over that 65.88. We're at 66.27 right now. The highs that were generated out there are 6,900. just can't seem to handle it. DAX in Germany, and the DAX in Germany trades just like the NASDAQ. DAX in Germany hasn't been able to get close to its highs. The DAX is $700 off its high. It's 10,500. And it couldn't handle price out here today. You know, it basically had a flat market out here today. As it's coming up to these levels, it's dying on the vine, you know, dramatically lighter volume. So Nikkei, let's go over to Japan. The Nikkei, that's a whole different animal. Nikkei last night goes up 343 points. And what this is all about, this is about the strength and the dollar, the weakness in the yen in a dramatic way. The Nikkei looks like it's going to overtake the 17,127, then probably take a breather. What I suspect it looks like you're going to have in there tonight over in Japan is that Abe, the prime minister, looks like they're going to turn around and say, okay, we want a new election. I'm not quite sure how that works. But bottom line is that JPY, if we go over and take a look at the yen right now is at 115. You know, talk about a run. This has gone from, got 15% weaker in the last 4 months. That is an extraordinary number. But that's going to be only the beginning, folks, because what the yen had done is that, you know, the yen, you talk about, that was trading at 262 yen to $1 US. That's when it was weak. That's when the Nikkei was at 38,000, I think, 32 or 38. And then it ended up bottoming out at 75. It bottomed out at 75 in 2011. You're at 115 right now. And your next swing point, and this is just how it's going to go. I mean, you get the swing at 124 it wants to get into, and then 144. You know, so this run, what has happened in the markets in general is the currencies are where you want to keep your head wrapped around, because these currency moves are not only fast, they trend for long periods of time. And when those trends change, even if it's a counter trend change, it makes a difference as to where these markets are going. After the closeout here tonight, this little baby is going to the moon right now. This is Fossil. Okay, so this is a teen deal. Okay, retail store, men's, women's, fashions. I believe it's mostly teens, though. The low is $91. The high is $129. This closed at 103, and right now it's trading at 118. They're going to do $1 billion buyback. Let's see what else they have to say. Fossil authorizes $1 billion buyback. They see revenue growth of 8.5 to 9.5%. They had an estimate of 10%. So bottom line is that that's not huge. What is big, though, is that their third quarter earnings per share was $1.96. They had estimated that to be $1.82. So they're over that. And that is a big number because of the fact that these retailers in general, especially teen retailers, folks, have absolutely got killed. So whatever they're selling out here right now, that's Fossil. The teens are liking it. And if we do take a look at Fossil and we put this up, let's see where 118 is on this baby. So, look at that. What a downdraft that was. Okay, so check this out. You're not going to want to touch this thing. This is interesting. So Fossil had, oh man, what a personality stock this is. Check this out. 2011, folks, in 2 weeks, the stock goes from 134 down to 69. Makes it all the way back to 134, goes from 138 down to 75 in 1 week. In 1 week, okay? Now, it's a watch company, huh? Oh, I see. Okay. So now what you're going to do, you're going to open up at that 118 level. Fashion accessories, so watch company. Whoa, baby. Well, anyway, I guess they've been buying some watches. But I wouldn't be buying that thing. That's the bottom line, is that because all you're doing is that you're coming into 2 monster downdrafts, and on the weekly basis, that's 30 million and 15 million. We did 2 million today, and you're not going to do much more. You know, it's bottom line is that it'll gap higher. We'll see what comes out from that. You stay right there because we got our man, Mr. Andy Hecht. He's going to be coming up next, growling a problem with you. When we're talking commodities, and inside that commodity market out there, there's no doubt the dollar has been ruling the commodity market. We'll see how this dollar shakes out in the next 3 or 4 days. What you're going to be looking for, folks, is this. The dollar, if it continues to pull back and the volume is lighter, that's telling you flat out that the dollar is going higher, and it's going to go after those swing points from 2008 and 2010. We've missed the swing point by about 40 ticks, well, about 400 ticks actually. That's not a lot, however. Okay, if you pull back tomorrow and the volume expands in the dollar index. Well, the expansion would have to go like this, by the way, okay? You'd need an expansion of about at least 35,000 contracts. 40,000 would be better. You get that expansion, that would be an indication that the dollar is going to do a retracement and the move that has gone all the way up. And this move, it's been glaring at us for a long time. It wanted to hit it. It hit it in spades. And I expect that you're going to basically pull back down somewhere into the 39.99 level. Now, that 39.99 level, that's going to be quite a retracement in the aspect of where we're going. But check this out. That's only a 50% retracement of the move that went higher. Because what the dollar has shown, and this is the longer-term basis of it, the dollar has shown that it not only wants to go into those swing points that were established 5 years ago. It looks to me like it's going to try to basically take those DX1. 1 second. It looks like it's going to try to take them out. You stay right there, folks. Our man, Mr. Andy Hecht's going to be coming up next. Do want to thank all the veterans out there, folks. You have a great day, safe day, and always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks. Visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. You stay right here. Man, Mr. Andy Hecht's coming up next. Go get him, folks.